start streaming. Okay. Good morning. Today is July 1st. Today, huh?
July 2nd.
Oh, today is July 2nd, and we are about done with chapter 13 in Accounting 2, and today we are going to do practice. And if you go to problem 4 on page, let me see here, on page 536. Page 536 of your textbook, problem 4. This is a comprehensive stockholders' equity transactions in stockholders' equity. So let me go to Excel, and we will do the practice there. All right, so let's start. Kraft Unlimited Incorporated was organized and authorized to issue 5,000 shares of $100 par value, 9% preferred stock. So that is 5,000 preferred stocks. They were authorized to issue that. What are the characteristics of this preferred stock? Is it cumulative or non-cumulative? 9% preferred stock. It doesn't tell us, correct? Mm-hmm. All right. And 50,000 shares of no par. 50,000 shares of no par, but still have a stated value of $5. Stated value common stock on July. Stock-related transactions for Kraft Unlimited follows. All right. We're going to do requirement number 1. Prepare journal entries to record these transactions. All right. Prepare journal entries to record these transactions, and then prepare stockholders' equity sections of a Kraft's balance sheet as it would appear on August 31st. Net income for July was 0 and August was this much. So we'll do number 1 and 2. We're not going to be doing 3 because we have a full chapter coming that will practice all of those evaluations. All right. So on July 1st, issued 10,000 shares of common stock at $11 per share. So what we're gonna, what is the journal entry usually? What do we debit? What do we credit automatically? When we issue stock. So July 1st. July 1st.
Cash and common stock.
Yes, sir. So we're gonna debit cash for how much?
I'm gonna do that after quick.
I have my calculator too. 10,000 shares at $11.
It's 110,000.
110,000. That's correct. $110,000. And what do we credit?
Common stock.
We credit common stock for how much?
For
10,000 shares. What was the stated value?
stated value was $5.
So common stock for
10,000 times 5
is 50,000. That's correct. And the difference is
60,000.
What do we call it?
Additional PIC.
Yes, sir. Now we got to say it.
A in capital.
Yes, sir. Additional paid in capital, common. You got to specify additional paid in capital. Well, since let's see, additional PIC for the difference.
It was 60,000.
60,000. Good morning. Good morning. All right. So this is July 1st. What else is saying on July 1st? Is that everything on July 1st?
Nope.
We still have one more on July 1st. It says what?
Issue 500 shares of common stock at $11 per share for services rendered in connection with the organization of the company.
So what do we call those? Organization costs or legal fees, if you want to call it.
Expenses.
Yeah. So we'll say, okay, again, we're going to debit. Oh, let me go back. Debit organization cost for how much? Organization costs. Now the question is 500 shares of common at $11.
5,500.
At $11. So 5 times 11 is
5,500.
all right. So for $5,500, and we credit. Let me just go up for a second and make sure this one is a little bit far. And we credit. What do we credit? Well, what are we giving up? Common stock. Yeah, we credit common stock for how much?
55. Would be 50,000 still.
What is the original cost of the share? $5. So 500 times 5 is
2,500.
2,500. And the difference is
3,000.
what do we call it?
Additional PIC. Additional paid in
Credit. Additional PIC for paid in capital for $3,000. All right, that's on the first. Anything else on the first?
Nope.
Nope. And then now we go now to July 2nd. What happened on July 2nd?
Issued 1,000 shares of preferred stock at par value
For cash. So we're going to debit what?
The cash.
Cash for how much?
Preferred stock.
What was the par value? Because it was issued at par.
Par value is $100.
Okay, so issued 500. I'm sorry, issued 1,000 at
$100.
at 100 is
100,000.
100,000. So the cash is $100,000. And credit. Let me do this a little bit. F2. Go back. Did I write 1,000,000 or 100,000 here?
100,000.
All right. And credit.
Common stock.
Common. Are you sure?
Preferred stock. Preferred stock.
Preferred. Stock. For how much? 100,000.
$100,000.
There is no PIC here.
Oh, okay.
It was issued at par.
Oh, at par. Okay,
Yeah.
it was.
Was issued at par. All right, on the 10th, on July 10th, what happened on July 10th?
Issued 2,500 shares of common stock for land on which the asking price was $35,000.
Uh-huh.
The market value of the stock was $12. Management wishes to record the land at the market value of the stock.
Okay, issued 2,500 shares of common stock for land on which the asking price was $35,000. Market value of the stock was 12. Now, since we know the management wishes to record the land at the market value of the stock, not at what it's worth, at the market value of the stock. So the market value of the stock was $12, correct? So 2,500 times the 12 is what? $2,500 times 12 is equal to
30,000.
30,000, yes. So what do we debit in this case now? What are we getting?
The land.
Land. So we debit the land. Debit. We debit the land for $30,000. Oops.
Well, the asking price of the land was $35,000.
But what does the management says?
Oh, they only record the market.
Yes.
Stuff for the land.
See, if the management doesn't say that, that means we will use the market value of the land. Yeah. But the management wishes to use the market value of the shares.
Good
Yes, sir.
morning.
Hi, good morning.
You're teaching this summer
Yeah.
too?
Yeah, we are. That's number 2.
They only had me with one student.
The final grade is going for count 2. I mean count 1.
I haven't checked yet.
Cause I got a 67. I didn't know I turned out. I know I turned it on my word. I think I got to do it online.
Talk to me about that.
Y'all finna talk to him about that pretty soon.
Okay. Sorry for the the sidebar conversation. Yeah. So the land is because the management wishes to record it at the market value of the shares. All right, and then what are we going to credit?
Common stock, right?
We're going to credit common stock for how much?
2,500 times
2,500 times what? $5 a share.
Oh, yes.
Remember the par value? So how much is that? 25,
12,500.
12,500. That's correct. 12,500. And the difference is,
17,500.
what do we call it?
Additional paid in capital.
Yes, sir. Credit, additional, PIC for how much you said?
17,500.
17,500. That's correct. All right. All right. Now, that's on the 10th. We go now to August 2nd. All right. We go now to August 2nd. What happened on August 2nd?
Purchased 1,500 shares of its common stock at $13 per share.
What do we call that? When the company buy back its shares?
Is it the treasury stock?
Treasury share. You don't guess, you
I
say
wasn't
it. Yeah.
guessing, I was just
So we're going to debit.
debit cash, right? No?
They are buying back.
So, oh.
They are not receiving cash, they are paying cash. So we debit treasury stock. All right? Treasury stock.
Comma.
Uh,
Comma.
yes, you're right.
Yeah, see? I know.
F2
Then you
treasury
go
stock.
Then you go credit cash.
Yes, sir. You looked at it, huh?
I was just remembering the long weekend.
Yes, all right. For how much we said?
Oh.
They paid $13, correct?
Uh-huh.
They paid
19,500.
19,500. That's correct. And we credit.
Cash.
All right. We credit cash for how much?
19,500.
Yes, sir. Why?
Because that's how much you purchase it. Right.
Yes. Here we don't worry about. There's no.
So additional paid in capital.
Yeah. Now we treat this specific. How many shares we said?
1,500.
We at their cost. Their cost now is $13 per share for this. Yeah. Any subsequent transactions, we will use the $13. We go back to the $5 only when we retire them. All right. Okay, so we credit. Let me make this looks a little bit nicer. F2. And so when you do a transaction, make sure you don't put the debit and the credit right beneath each other. Do it this way. First the debit to the left and then the credit to the right for that much. All right. So that's on August 2nd. On August 10, what happened?
Declared a cash dividend for 1 month on the outstanding preferred stock at 2 cents per share on common stock outstanding, payable on August 22nd to stockholders of record on August 12th.
Okay. So let's take a look at this for a second. Declared cash dividends for 1 month on the outstanding preferred stock. All right, 1 month. If you go back to the original statement of the problem, it says we're authorized to issue 5,000 shares of $100 par value 9%, preferred stock. So how much out of those they issued? They issued how many shares? How many preferred shares are outstanding at this time? How many preferred shares are outstanding at this time? So if we're gonna do it, let's do it in this here. Well, don't you see on July 2nd?
Oh, that's what I look for. 1,000.
They issued 1,000, correct? Even though they were authorized how much? They were authorized?
50,000.
No.
Yeah.
No, they were not authorized. They were
5,000.
5,000 shares, 100 part. Yes, 5,000 shares. Now the dividends is, how much is the dividends?
2%, 2 cents per share of common stock.
No, the dividends for the preferred first.
Oh.
How do we find the dividends? You remember what would you say? Reverend Darian is on his cell phone all the time. He's not there yet. I've been seeing you. Yeah, we need your attention here, Reverend Darian. 9%. Remember the formula for the dividends, preferred dividends? What does it say? Number of preferred shares times the preferred outstanding shares times the percentage given.
Okay. Got the preferred shares outstanding times the par value per share times the percentage given.
Yes.
Stock.
That will give you a dividends for 1 year.
Anyhow.
So we're going to say 1,000 shares were issued and outstanding, correct? As of this time, 1,000 shares times the par value is 100, correct?
Yes, sir.
Times
9%.
times 9%. How much is that?
On the calculator.
9,000. Oh, 9,000. I'm doing the backward, thinking that the board will do backward also. Okay, 1,000
I got 9,000.
times 9% times 100. So that gives us 9,000, correct?
Yes, sir.
But the question is,
For 1 month.
this is only for how many?
So that's for the year, right?
Yes,
So
that's for a
it'll be
year.
For 1 month, so we're going to divide by 12, right?
Divided by 12,
And get 750.
get 750. So 750 for the preferred,
For
correct?
1 month.
So 9,000
That's for the
divided by 12 equal 750. That's for the
month.
preferred shares. Okay, so this is preferred dividends. F2. Okay. Preferred dividends. How about the common dividends? How do we figure out the common dividend? They're saying 2 cents. 2 cents per share of common stock outstanding. How many common shares outstanding so far?
Oh, common outstanding.
We started with 10,000, correct? July 1st, 10,000. And then 500 on another 500.
Then we had $500.
So the total is and then issued, yeah. So let me see. We started with 10,000 plus 500 plus 2,500. Okay, and then
When we subtract the 1,500 that we paid.
yes, minus 1,500, so that gives us 11,500 common shares outstanding. 11,500 shares of outstanding times 2 cents.
Oh yeah.
Remember, we're looking for the dividend times 2 cents times 0.02. Is that 0.02? Okay, and that will give us what?
$230.
How much?
$230.
That is exactly $230. And that is the common dividends. Common stock dividends. The total dividend now is what? Total dividends declared is the 230 plus 750.
$980.
$980. All right. So declared cash dividends. All right. Declared cash dividends. So what do we debit when we declare it? What do we debit?
Stock dividends declared.
So that was yes, that was August 10, correct?
Yes, sir.
August 10. We debit cash dividends declared for $980. And we credit?
Cash dividends payable.
Yes, sir. Cash dividends payable for $980. This is the declaration date. The date of record was when? August 12. So in August 12, what do we do?
Just report the date.
Huh? Say it again.
Report it. Like,
Remember, date of record?
yeah, I know we got the data declaration, data record, then we got the
Payment date.
payment date. So,
The date of record, no entry.
no,
All right, no entry. On the date of record, no entry. Now the payment date, which is the payment date there?
August
22nd.
22nd.
All right, 22nd.
So we just gonna switch them around.
Yes, sir. What do we debit?
Debit, cash, dividends payable.
All right, yes, sir. Cash, debit, cash, dividends payable for $980. And we credit
Cash dividends declared.
cash.
Yeah, cash.
Wait, you're still asleep.
Nah, I'm saying cash dividends.
Cash.
Yeah.
Because we are paying cash, not cash dividends. Cash.
I'll just cash. Oh,
Yeah, we're paying the dividends
So cash.
through cash. Yes, sir.
980.
$980. All right? How come you're not writing down these things?
No, I got it written down right here.
Where?
Right here. Because this is what we went over Thursday.
No, but the question, problem 4.
Questions, yeah.
Well, what's happening to you this morning, Brother Billy?
What do you mean? No, because
You're not writing notes. You're not.
I am
You're
right.
still sleeping.
I'm over here answering the question. What are you talking about, Dr. Ali?
We count on you all the time.
I know.
So we don't sleep. I know you came a little late this morning. Okay, so this is the prepare. Now we need to prepare stockholders equity section. Now that's requirement number 1. Now we need requirement number 2. Okay, that's number 1 requirement. Number 1. All right. UI. Correct? UI, not.
You just missing. Like, put an I after the U.
I think we're okay now. All right, now we need requirement 2. Requirement number 2, we need stockholders equity. Now, what? Not from there. The components of stockholders equity, 3 components. What are they?
Contributed capital. Then you got your
Retained earnings.
retained earnings. Then the treasury stock.
Your treasury stock, if we have it.
Yeah,
But we do have it now.
we sure.
All right. So when we do stockholders equity, the first thing is we're going to put the title. We're going to put the title. The title here is what? We're going to put it kind of in the middle.
Crafts Incorporated. Crafts Unlimited.
Craft Unlimited Incorporated, correct? INC. All right, and then we're going to write down. What do we write down?
Stockholders equity.
Now remember, this is the only. What does it say? It says prepare stockholder equity section of a Crafts balance sheet.
Oh.
So we're going to put balance sheet. We're not preparing the balance sheet, but only that.
Stockholders equity.
Yes. So we're going to put balance sheet. All right, and then we're going to put the date, which is
It says August 31st.
August 31st, 2014. All right, and then since we're only preparing stockholders equity, I'm going to add another line, stockholders equity. Equity. All right, and the first component is going to be what? The contributed capital, correct? So we start here. Contributed capital. All right, and the contributed capital, what does it have in it? What are the components of contributed capital?
It'll be the stocks that you issue.
We got to put the preferred stock
Preferred stock.
and the PIC if we have for common stock. Common stock and the PIC of the common stock if we have it. All right? So, let's start with the preferred stock.
My pen ran out of ink, Doc.
preferred
Yeah, extra pencil paper.
stock. So the preferred stock, we start with the par value, correct? We're going to put all the details. We start with the par value, which is, how much is the par value?
$100.
Okay, we're going to say 100 par value. 100 par value. Now, and then we're going to say how many authorized. So how many shares were authorized?
A preferred stock?
Yeah,
Or
preferred stock.
Or 5,000.
We're going to say 5,000 shares authorized. 5,000 shares authorized. All right, and how many of those issued and outstanding?
$1,000.
1,000 shares issued
Yes, sir.
and outstanding. And so what is their value? What is their value?
1,000 times 100. That's 100,000.
Say it again. 1,000 times 100 is
100,000.
$100,000. So I'm going to put it a little bit farther here. All right. $100,000. $100,000. All right. Hey, good morning. Good morning. No, we're good. Yeah. Oh, we just need to. Let me show you.
Morning, sir.
Okay. Do we have a PIC for the preferred shares?
Yeah.
We do.
Shoot.
Why? Take a look of the transactions we did. Did we have any PIC for preferred? Starting from here. Okay, first one we did, it was a common stock, correct?
No, it's preferred. Remember, that's what we were doing. Oh, no, we didn't have no additional PIC for
Then
preferred.
organization cost, then the preferred
Yeah,
stock.
we didn't have no additional
Yeah.
PIC for
So that's all. No PIC for the preferred stock. Now we go back to the common now. Okay, we're going to say common stock. All right, what is the par value of the common stock? It is a no par, correct? No par, but it has a stated value of
$5.
$5. So it has $5 stated value. All right, and then we're going to say how many were authorized. How many common shares were authorized?
50,000.
Originally, yes, 50,000 shares were authorized. Now, how many issued and outstanding? How many issued and outstanding?
It was,
Start from the beginning.
yeah, 10,000 plus 500
Uh-huh.
plus 2,500 minus 1,500.
The total issued was
11,500.
13,000. Before you get to the treasury.
Oh, before you get to the treasury. Yeah.
Oh, let's say 13,000 were issued, correct?
Yes, sir.
13,000 issued. But the outstanding is like how much you said? 11,500. 500 in outstanding. Those are the outstanding shares. Shares outstanding. So how much the value of these shares outstanding?
11,500 times 5. 57,500.
How much?
57,500.
You sure?
11,500 times 5. 57,500.
Oh, let's go back. Let's go back here. Yeah. 50,000. That's number one.
Oh.
No, sorry. How many shares was that?
No, we got that by, because remember the first 10,000 was issued at $11 per share. That's for July 1st. That's why that number is like it is right there.
50,000
But look,
plus 2,500, 52,500 plus 12,500. How much is that? Add all of those together. 50,000 plus 2,500 plus 12,500.
65,000.
That's it.
Fine.
65,000. That's the outstanding. 65,000. Now we need the PIC. Additional PIC common. Additional, because it's part of the contributed capital. Additional PIC common. Alright, go back again and add all the PIC for the common. What do you come up with?
I know one was 17,500.
Start with 60,000 Z plus 60,000 plus 3
Plus
63 plus
17,500.
17,500
80,500.
80,500 exactly. So we go down here 80,500. So the total of these two are, oops, we put a line under that, F2, oh. The total 80,500 plus 65,000 is what?
145,500.
145,500. That's correct. So add the 100 and the 145,500 is 200.
45,500.
Okay, 245,500.
That's
the total contributed capital. All right, total contributed capital. All right, so I'm going to put that in bold and a little bit higher so it will be recognized, and then I'm going to underline it with Bold it. Okay. And so this is the first component, contributed capital. The second component is
Retained earnings.
yes, sir. So I'm going to write down here retained earning. Okay, how much is the retained earnings? Do we have a retained earnings? Craft. Okay. Prepare stockholders' equity for Kraft balance sheet as it would appear on August 31st. Net income for July was 0 and August was 11,500. So our retained earnings is what?
11,500.
11,500. Now remember we gave dividends.
Oh, yeah.
The dividends is given out of retained earnings. So how much dividends was there?
980.
980. Take it out of 11,500.
How you doing, Adele?
How you doing?
Good morning.
Good morning, sir.
I ain't got no paper.
Minus 980.
Uh-huh.
10,520.
How much?
10,500.
Exactly. Retained earnings is 10,000. How much you said?
10,520.
10,520. Now, if you add these two, let me bold this one. And so add the 24, 245, 500 plus the retained earnings. What do you get? We get a subtotal, correct?
245, 500.
Uh-huh.
Minus. Oh, no.
Not minus.
I'll add. What do you get?
24, 5.
Where you get 19,520 from?
That is the return, not
No.
the 11, sorry.
It's 10,000.
10,250, yeah.
10,520.
10,520. Yes, sir, yeah. So add the two. We get
256,020.
256,
20.
20. This is the subtotal. Now, since we have a retained earnings, since we have a treasury stock, we're going to say less treasury stock. Remember that?
So we're going to put a subtotal for the 2052.
Yeah, we just put the sub. Oh, yeah, see that 250?
Yeah, so I was going to put to the left of it. Just
Okay,
subtotal.
just say subtotal. That's subtotal. And then we're going to say less treasury stock. This treasury stock. How much was the treasury stock? Go back to the problem. Go back to up here. It was 19,500. August 2nd.
19,500.
Yeah.
Because we did 15 million times 13.
19,500. So 256 and 20 minus 19,500 is
236,520.
exactly. This is your total stockholders' equity. Total stockholders' equity. Yeah, that should be on the upper line, not this line here. Copy. Bold, larger, and I need 2 lines here. Okay. So total stockholder is 236,520. Brother Ledbetter, why are you coming here late? You in the 1 hour late?
You don't even know my name.
Huh?
You don't even know my name.
It was long night. We had to work. Stayed up last night.
Is that a good excuse?
That's the only excuse.
Technically,
Alright, so then gonna go back and
But I told him though, that's what I'm talking to him about. We can't
go back change that beat to a C.
Don't do that, please.
speaking of green, I turned in my work and I still have a 66.
No, because I'm still working on it. I'm trying to.
Let's say online, I have a 66.
Yeah, I'm trying to fix. See, my record is different from the jigs, so I'm trying to make it equal. By the end, hopefully today, I will
Okay.
fix it.
Yeah, we ain't gonna be late. It's late. I'm not saying we ain't gonna be like on time. But
Okay.
we ain't gonna be
But you still guys are not clear for. You still pre-registered, not current. Yeah.
They said,
Yes,
I'm
sir.
a VA student. They said I was good as soon as
Huh?
I'm a VA student. They said I was good as soon as I registered.
Yes, sir. Go back to the financial aid. You won't get. Did you get award letters?
I'm a VA student. I'm a VA coach.
Oh, okay. And you?
It should be done today.
Okay, yeah. So make sure that so we can proceed. Only if you're not current, it wouldn't count. They won't count you if you're not current. So just make sure you're current today.
Okay.
Okay, yeah. Take a look here, everyone. See how the stockholders' equity look like? 2 major components, 3 components actually. You got the contributed capital, which is the preferred, common, and additional
If you have
capital. All those 3 together are called contributed capital. So the total contributed capital in this case is 145,500. And then retained earnings is the second component, which is
it was more than that. The total contributed capital was 245,500.
we had the we didn't put the income,
You
correct?
got the preferred stock. Remember the 1,000 shares?
Yeah.
Share outstanding.
100 plus 145,500 is
245.
yeah. And then we had the retained earnings, second major component. We ended up with
256,020.
minus
The
treasury stock. 19,500. We ended up with 236,520. Okay, here is one concept left in this chapter is the book value that we didn't cover so far. That's the only thing left. We covered stock split, we covered stock dividends, cash dividends. We are left with now book value per share. Book value per share. So what are we talking about when we say, suppose you are a shareholder. Okay, if you are a shareholder, how much of this total belongs to you? Let's say you
Like
own.
percentage wise or?
Let's say you own 10 shares. Let's say you own 10 shares. How much of that belongs to you? If you own 10 shares, Mr. Ledbetter, if you own 10 shares, how much of these 236,520 belong to you?
All of them.
Let's say you are a preferred shareholder.
I'm saying, like, so when you own the shares, you own them. Like,
But you mean you only own 10 shares. You're going to own all of these?
How many? Well, it's only 1,000 shares issued. No, not more than 1,000. It's like 11.
First, figure out, you're a common shareholder, correct?
uh-huh.
Figure out the property that belongs to, the equity that belongs to the shareholders, common shareholders, divided by how many shares outstanding, will give you the book value per share. times how many shares you have. So if we find the book value for common shares, so what is the equity that belongs to common shares here? Let me write down a formula for us. Okay, book value per common share. Oh, per common share. Remember, guys, the preferred stock. Why is it preferred? Why is it called preferred stock? Because it has a preference over the common shares in two ways. What are those two ways? It has a preference in two ways. In receiving dividends, number one, and number two, if there is liquidation, the preferred shareholders will get their equity first. So we need to find the book value per preferred share first. We want to give them their dividends their equity first. And once you take their equity, everything left belongs to common share. So let me just say book value per preferred share first. Is equal to all the preferred equity divided by number of preferred shares outstanding. Preferred shares outstanding. So what is the equity for preferred shares?
19,000.
The equity for, go back to the preferred shares.
Oh.
They have
It's $100,000.
$100,000. But I'm going to add something to it. Assume there is 1 year dividends in arrear. Now, you got to give them everything belongs to them. What if we have PIC for the preferred shares? Then you got to include it. You got to give them everything belongs to them. So we're going to assume there is only 1 year dividends in arrear. Also, so they are entitled to the 100,000 plus the dividends in arrear. How much is the 1 year dividends in arrear? We found that earlier. Cash dividends for a whole year is $9,000. Remember we did that earlier? So they are entitled to the 100,000 plus 9,000. So let me go back to here and I write down preferred equity. Equity includes or equal to 100,000 plus 9,000 dividends in arrear, and is equal to $109,000. That's the equity that belongs to preferred shares. Now divide 109,000 by how many preferred shares outstanding? How many preferred shares we have outstanding?
Preferred shares outstanding.
Do we have 500 of them? I think we had.
We have 5,000 shares,
Read the problem. Make sure you read carefully. Yes, 5,000 shares. Yeah. So we're going to divide 109,000 by 5,000. And that will give us $10.90, correct? Or 190? Oh no, I was thinking about what do you get?
21.8.
21.8 dollars. So if you own 5 shares of preferred stock, then you are entitled to 21.8 times 5. Now everything else belongs to common shares. So if we take, so the book value, so how much the equity belongs to common shares? I'm going to say common shares equity is equal to 236,520 minus 109,000. The whole 236,520 minus 109,000, and that gives us $127,520, correct? So the equity per common share, per share now, how much is it? It's going to be book value per common share is equal to 127,520 divided by how many common shares outstanding? Not the money, the shares.
Oh, 11,000.
11,500, yeah. So the book value per share is $11.08. If it is 0.08,
like, you know what I'm saying? Like how we had 21.8, that'd be like
yeah.
$21.80.
Just say $11.
Okay.
$11 per share. So if Mr. Ledbetter has 10 shares, so you're only entitled for 10 times $1,110 out of this whole equity for you as an individual, yeah. Okay? Okay, now we are done with chapter 13. Through with common stock. It's all recorded. If you go back, it's all recorded. Yeah. And by the grace of God, tomorrow we will start the bonds. Don't miss that. It's really, I advise you to come. Don't miss it. It's bonds, B-O-N-D-S. Not bonds, B-O-N-D-S. Say it. Yes. It's very, very important. So we'll cover that. Okay.
This class isn't online. This summer, isn't it?
It's not online yet. I haven't heard, but I'll keep recording it. Yeah. Because we have somebody out of the state, I think. You know Jimenez? You remember Jimenez? So he's going to edit too. Yeah. So guys, go straight now and get current, okay?
Yeah, I'm gonna go down there.
All right.
So, Don, you said that the grade will be clear once all the stuff get in the book?
Huh?
You said the grade will be clear when all the stuff get in the book? Come on, I said I
I
had.
think you're current, I think.
No, I'm talking about for account 1.
Uh-huh.
You said all the stuff will get clear when the system.
You talking about
Oh, yeah, I'm fixing it now. I'm going to match my records with, I'm working on it to make it match. I think after the final exam, which is not that good, but you may end up with a B. I told you, see earlier, but you may end up with the D. B and
What about me?
now him, you will end up with the D.
Huh?
D minus maybe.
Are you serious? No, don't play with me.
Well, you gotta beat you out.
Well, I'll see you in the morning.
All right, okay, y'all take it easy now. I'm taking the grades. Once I'm done, I'm taking the grades there, yeah.
Okay.
Today, yeah. And you can check it later on Jigs, yeah. I'm trying to make a match. Oh.
So I'm gonna head to the library for a sec.